This is our Forex blog for June 9th, 2014. And before I show our currency indexes, which I think is one of the easiest ways of trading, the most high probability, I'd like to just showcase how our Forex trading signals are doing. Now, we actually auto trade these, so it's essential for us that they work. We don't release auto trading for our users. You have to manually put the trades in. We don't want people using our signals to manage money and get a percentage of it. And we don't want to become CTAs that someday we might manage money. But as you can see, the winning percentage is improving pretty rapidly. Nice win here, win here, win here, loss. Pretty much close to break even, huge win. Short here at 37 out of 40. Very small 3 or 4 pip loss. Huge win and 2 tiny losses trying to buy the fib target probably off this last move. The 1.618 usually gets a bounce, and when it doesn't, if price is a little bit below there, you do tend to get a move too. So that's the euro dollar. I'll just quickly show some of the other ones. Here's the pound dollar, win, small win, huge win, win, another breakout trade right here. This is a beautiful narrow range rectangle breakout. Anytime you have low volatility and it breaks out and it's right near the previous swing high, we tend to try to front run the actual breakout to get in a little bit earlier and have a much tighter stop. It's all based on time patterns. But then you can see the risk up here at the high, where we actually made 3 or 4 times more than what the risk is. Same thing here. This trade really didn't pan out as well as the first one, but the win is bigger than the loss, or at least equal to it. And that's the key to trading: small losses, bigger wins. And most days in the past I've been spending the whole day on the euro and the pound fixing. We have about 250 different trading signals in there now, 250 different patterns. Each one's rare and unique. Here's the dollar Swiss. You can see it did really well on Friday. It absolutely made a fortune on Friday. Pretty decent win, huge win, huge win, huge win, small, 8 pip win, huge win, loss, very small loss here, and maybe 4 pip loss here. You can see the losses are on days like that are a very tiny fraction of the wins. And here you have pretty much a 2 pip win, maybe a 4 pip loss, big win, and then we found the low and wrote it up. And there's numerous different ways of trading that allow us to have such high accuracies, mostly using our statistical tools. And when the market is strong enough, for instance in this case, to go through the 4-hour statistical high or hit our 2.0 containment band, I'll just show one of our secrets. These are methods I've taught in our classes that we no longer do for years. The 1.5 band most of the time contains price. The 2.01 contains price even more. And the fact that the market was so strong as to get above the 4-hour statistical high and hit the 2.0 band, that when it retraces over a number of hours, it has to be 3 or 4 hours. In this case, it went through the weekend. And then you get a bar reversal pattern showing some strength at the statistical low. You get these huge moves. So I look for signs of strength, then I look for decent bar pattern type pullbacks, and if the market isn't statistically weak, we take a shot. Now here's the dollar CAD. It didn't do as amazing as some of the other ones, but you can see small loss or small risk. The win was bigger than the risk. Here's your risk. You got out here with a little bit more than what your risk was. You made maybe a pip or two, or maybe you lost a pip. But the point is, when the trades don't work, and you can see this trade that we're in right now, we sold here, and this is what our current risk is. So a lot of times the trades that don't work, you end up losing a small fraction of what you initially risked. And a lot of the trades, especially on trend days, go 3 to 4 times more than what your initial risk is. So the key to trading is not only just having a higher win percentage than losing percentage, but it's catching 2 times, 3 times, sometimes 5 times more on those winning trades than it is on the losers. Now for those who want to discretionarily trade, our currency indexes and our currency meters are the best way of trading. Let me just briefly go over that. This lets you see what each individual currency is doing. I'm showing 4 of them here. We also got the Swiss, CAD, Australian, and New Zealand. And basically what you want to do is just simply find a strong currency versus a weak, and especially when all the time frames line up. Like the euro, you can see it came back up to Friday's high, failed, broke down underneath the hourly moving average, broke down underneath VWAP, broke down underneath the 15-minute moving average. This is a trend that's very likely to go down. So which currency is strong at that time, to sell this weak currency against? Well, the dollar is trending down at that exact time. The yen is going sideways, and the daily, weekly, monthly trend's down. The pound doesn't look too hot. You can see the Australian is above its previous day's high. So the Australian, or I'm sorry, selling the Euro Australian around 4 is the highest probability of all the trades, and also the New Zealand as well, because it's above the hourly. It's kind of sitting sideways. The daily trend's up, the weekly trend's up. It's likely to explode, especially even if the New Zealand itself goes sideways and the euro gets weak. You're going to still make money. The best trades are when one currency pair is super strong and going up, and the other one's super weak and going down, or in this case, vice versa. So let's take this up. We're looking at this a little bit before 4 o'clock. And like I said, this is a currency that's very likely to go down. Here's 4 o'clock, and you had this nice little pullback. It already made new lows for the day, and this is your risk. You go short once it breaks this bar right here. Oops, I meant to draw a little circle. This is your risk, and you're never going to catch every pip, but you can see it moved. If your risk was, we're going to round up for 10 pips, we probably only had 8 pip risk, but you can see it moved 10, 20, 30, 40 pips down. And you also can scalp these markets. You can, on each little swing, get into a pullback somewhere near the 50 or 62. Especially here, you have a nice little double top right there. Your risk, you could go short right here with a super tight 6 pip risk. You already have your profit target, and it's 7 or 8 or even 10 times. It's hard to even calculate this one. It's at least 6 to 8 times bigger than what your risk is, and you take a stab at it. With wins even 3 times bigger than your risk, you don't even have to be right 40% of the time. But imagine, when you use a currency indexes like this, you're going to have a much higher winning percentage. Now, you can use also range charts like 5R, 5 pips per bar. This allows you to, risk whatever amount you want. You can just put your stop on the other side of that. If you want even tighter stop, you can do 3 pips per bar. And let's go back here, around 4 o'clock. Let's say you get this little pullback and you went short right here. You put your stop above the high. You risk 4 pips. All right, you have a loss. You get short again, and then the second one works. And maybe you're out scalping it here. You wait for a little bit of a pullback. This is your risk. It goes down and goes sideways. That's your win. You've got to be a little bit more careful selling the absolute lows, but because this is super weak, you can take another stab at it. I would always cut my trading size down if I'm selling the absolute lows, because it's a riskier trade and has less odds of winning, but that's the biggest win today. And so you have a loss, win, win, win. And you can see 10 pips, maybe 8 pips, and 15 pips. So you can scalp these, or you can get in and hold positions for a longer term. You can also use tick charts. Let's say I don't usually trade the Euro Australian, but 50T, 50 ticks per bar. I like range charts because they're more based on pip movement, but you can see here you might have had a loss again, very, very tight stop. And what you can do is when you're short, every time it makes a new low and has a little pullback, you move your stop above that high. It makes a new low, comes back up, it's down here, it's going sideways for a while, it's not bouncing. I'd move my stop down, and at that point draw your fibs on this and get out somewhere between the first and second fib target. That's usually going to be your maximum profit, and you can frequently risk 5 to 8 pips with wins of 30 plus pips. I didn't draw that circle right. It should be down somewhere to here, but you can see in this case you have an 18 to maybe 20 times bigger win than what your risk is. So that's the key and the only secret to trading. And this is basically what I'm teaching the computer to do. We're using over 40 different support resistance areas, our containment bands on multiple time frames. There's close to probably 60 different indicators with different time frames on here. You can see just 2 of the containment bands here. I use the 3.0 and the 4. I also use the 3-minute containment bands, 5-minute containment bands, 15-minute containment bands for different types of trade patterns. A lot of different statistical levels off the 15-minute, 30, hourly, 4-hour, and even daily. So, but even without our signals, there's so many different ways of trading using just our currency indexes and currency meter, focusing on the strongest currencies to buy, the weakest ones to sell. And of course, you can use trend lines off of these. The Australian's going up, and you have a multi-hour breakdown right here. You can also draw your trend line on the way down and project it off the lows and look to get into trades here. That one didn't really bounce that much, but the second one did, and you got in about 20 minutes early for a much bigger win. You can see that was around 3 o'clock when that happened. So at 3 o'clock, let's take a look at the Euro Australian, and we'll go back to just a 5-minute chart so we can see the whole day. At 3 o'clock, you could have jumped the gun almost a whole hour on this. Here's 3 o'clock. This thing was going up. It's kind of consolidating up here. You don't know at that time. It's definitely going to break down, but you could go short right here and get in, 15 pips a little bit earlier in this trade, because we already knew the euro was weak, the Australian was strong, and it was likely to bounce off a support area. And trend lines, especially when you use projected trend lines off of the swing high or swing low, they're very predictive. And all the methods that work with trend lines, double tops, double bottoms, fibs, fib targets, all work on our currency indexes as well as our regular charts.